Hey guys, Lincoln here. Today I want to talk to you about how it feels to lose $9,000 in one day on the market. So this morning I woke up and as always I checked my Robinhood account because I just enjoy looking at my money move up and down, and I get some sort of sick enjoyment out of red days. So today I looked, and at 10 a.m. I was down $3.5 thousand. At 2 p.m. I was down $6,000. And by 4 p.m., by the end of the day, I was down $9,000. I want to take the time today to talk to you about how I look at these numbers and how I feel more empowered when these numbers are down than when they are up. And that's not to say that I like my money to just vanish, but let's talk about why I don't take a beating on myself when these numbers are down, and why I actually get happy when I see red days on the market. So the stock market is not for the faint of heart, right? The stock market is very emotional. People who are investing their hard-earned money get very tied to their positions on the market. So when they wake up and they see their money go down by 5%, 6%, and then by the end of the day, they're down 14%, as I was today, they get scared and they sell off their positions. And that creates more fear in the market. And so more people see that and they say, oh, the market doesn't look great, I should sell too. And so they sell. And that just keeps going a vicious cycle. The more you sell, the more other people will sell. The more other people sell, the more you will want to sell. And you have to understand that, right? You have to understand why that happens. It's a psychological failure that we all have, that we move in a herd and we like to follow the crowd. Just being human, right? We want to be safe. We want to be on the safer side and not try to stick our neck out for things that we think are different, right? We don't want to be too different. We like being part of the cool kids crew. We want to feel like we belong. We want to feel a part of something. So that's just us being human. We see a group of people doing something and we say, oh, I have to do that too, even though we might not even realize that it's bad for us if we follow along, right? So this is what happens in the market. It's the same thing. Everyone sees one person sell something and somebody else joins in, and then the next guy joins in, and the next woman joins in, and all of a sudden everyone's joining in. And then you come along, you see it, and you say, oh my God, this is bloody red today, I have to get out of this. And your money is just draining. And the more you see your money drain, the more you want to hop out, right? But you have to fight against that. You have to remember that what you're investing in has value, and that you're investing for the long term. You're not investing to make a quick buck. It's not going to be tomorrow that you pour your money out and you retire. Your money needs to stay in there and work for you, right? Think of your money as little employees working for you. Just because the day is getting hard doesn't mean you pull them out, right? When you're at work and your day is getting hard, your boss doesn't come to you and say, "Hey, go home." Your boss says, "Hey, stay in there. Keep working. I know it's hard right now, but you gotta keep going. We're gonna get through this." Right? So you have to keep going. You have to let your money keep going, keep working for you. Let them stay in. Let them keep chugging along. There's going to be bad days and there's going to be good days. As long as you realize that in the end, your money will end up bringing you more returns. We have seen that over and over again through the Great Depression, through the lost decade, through the 2008 Great Recession, the market has always bounced back, right? So the people who understand that the market is emotional and people are going to act on emotions, understand that they have to be smart and act on reason and be grounded in what they believe in. So if you're investing in something that you really understand that you believe in, as you should be, right? On this channel, we only advocate that you invest in companies that you believe in and that you understand, and for the long term. For 2 years, 4 years, 10 years, right? You want to hold on for a long term. As long as you're doing that, as long as you're investing in companies that you understand and that you believe in, there's no reason to pull your money out as soon as things go a little bad. As soon as you see red, you shouldn't be pulling your money out. You should hold on. You should actually get excited. For me, I get excited when I see a red day. When I see everyone being dumb, right? Remember, Warren Buffett said, be fearful when others are greedy, and be greedy when others are fearful. I subscribe to that. And as soon as I see a red day, I'm like a shark. I smell blood and I jump in. And I say, this is my day. If I have enough free cash flow, free cash in my bank that I don't need right now or for the next 3 to 6 months or 12 months, right? If I can do without that, as long as I have an emergency fund set up to weather any storms that might come at me, I'm going to take my money, my free cash, and put it into the market. I'm going to double down my positions. FMCI was down 11% today. So if I see that, I'm going to say, great. I'm going to buy more and average down. We're going to talk about dollar cost averaging more as we go through this journey together. But dollar cost averaging is a very important concept to understand. If you're investing for the long term, it doesn't matter what the market does on a day-to-day basis. All that matters is that you keep investing for the long term. You buy consistently. You buy when it's up. You buy when it's down. You buy especially when it's down, right? So when I see my positions down, I jump in and I say, great, today's a sale. I'm going to make sure that I take advantage of this sale. When I see up work down, my other position, my second biggest position, when I see that down, I bought it when it was down. It was down to $8 when I bought it because everyone else was fearful and they didn't understand the company. So they jumped ship as soon as things went bad. And I saw it and I said, what's going on here? And I jumped in and said, okay, all is well. This company is still fine. I'm going to buy. That was last December. This company is now up to $15, right? And even more. And Uber, right? I'm still down on Uber, but I believe in them in the long term, right? Today I'm down a couple $1,000s on Uber, but I believe in the long term that's going to flip, right? And the table's going to flip, and I'm going to have the last laugh. Same thing with Cloudflare, Snapchat, Redfin. Redfin today had news that on this bad day already, they had news that some analyst or some investor became bearish on Redfin because he thought they were valued too high for this climate. And that makes sense. Redfin is overvalued in my opinion. I'm not going to sell. At the very least, I'm going to hold. I'm just going to hold my position and let this time pass. Right? Let the bad days pass, let the good days pass. And I'm just going to hold on until I have enough money to buy more. Until it makes more sense to me. Southwest, of course, went a little bit down today because of its peers. American Airlines, United Airlines, and they're not looking too good. They're looking to lay off their employees because this virus is not going away anytime soon. We haven't found a vaccine yet. But this company still makes sense. It's still a great airline. I still love the company. I still love the leadership and the culture that has been instilled in this company. So I'm not selling. There's no reason to sell. I ended the day at some point before 4 p.m. down $9,000. That's 14.4% of my portfolio gone in one day. But the thing is, it's not actually gone, right? We can look at my overall portfolio and we can see that I've actually seen worse days, right? When this whole thing started, I went down 15%. And then it even got worse. It went up a little bit and it got even worse. I went down 30% on my portfolio. But then look what happened. Over time, it went back up and went back up. Of course, some days went back down. Then it went back up. And I'm still up. Even today, I'm still way above where I was back in April, right? And back in March. And back a year ago, I'm still way above. I am up over $16,000, 44%. Right? This is what I mean. If you buy and you hold, you will likely be fine. As long as you're investing in good companies that you understand and that you believe in. So when you see red, learn to get happy. In the short term, at least. As long as your companies are good, be happy that you're seeing red. If you have money, that's a great day to go shopping. Right? When you see red at the mall and they're saying everything has to go and they're saying sell, 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 you don't run the other way. You hop in and you buy. It's a similar concept because the clothes and merchandise you're going to buy from that clearance, from that store, still makes sense. The jacket is still gonna fit the same way. The dress is still gonna fit the same way. Your sneakers, they're still gonna be Jordans. Just maybe the store can't afford to keep selling Jordans. But those Jordans still work. They still are Jumpman. They're still solid, right? So you have to hold on. You're a stock, you're a company. You're not just buying stock, you're buying a whole company. And as long as that company still makes sense, just keep holding. And that's how I look at the market. So when it's red, when I lose $9,000 in one day, I am not sad. I am fine at the very least. And if I have money, I am very happy. Today I had no money to buy more shares, but I was still fine. Because when I do have money, we're still in this climate, so I will still find sales, right? I will still find good deals because I know the companies I am investing in. I understand the companies I invest in, and I believe in the companies I invest in. And that is the bull mentality. And you have to have the bull mentality, right? If you're going to be successful as an investor, you must learn to embrace the bull mentality. The bull mentality is that we know what we're investing in, we understand what we're investing in, and we believe in what we're investing in. And we hold on to our investments for the long term. So thank you for watching this video. And I hope that you will learn to look at the market differently. And if you're just getting started with investing in the market, I have a link below to join Robinhood. And if you join with my link, you get a free stock straight from Robinhood, completely free. And of course, I get a free stock, right? It's a win-win as always. And you get started off on your journey on the right foot. So click the link below in my description, join Robinhood, and get started investing. So thank you. Remember to like this video and subscribe to this channel because I have more videos coming for you every weekday on the stock market, the investor mindset, and the bull mentality, right? How do you invest for the long term to be successful in the future? We don't do day trading here. We don't do get rich quick schemes. We do long-term bullish investing. So subscribe, hit the notification bell, and I hope to see you next time. Thank you. Have a good day.